Hello and welcome to CMS Forex News. I'm CMS Market Analyst Nick Nasad. Today is Wednesday, October 29th, 2008. Japan saw its preliminary release for September's industrial output climb 1.2%. This was higher than forecast and follows August's very weak 3.5% decline. Despite the better headline number, output for the third quarter overall declined 1.2%, which was the largest quarterly decline in 3 years. Output in the fourth quarter is expected to be weak, as both domestic and foreign demand for Japanese goods is declining in the face of this global slowdown. New Zealand saw its trade balance fall into further deficit in September as imports increased and exports fell compared to August. The deficit amounted to 1.18 billion New Zealand dollars. Asian markets were mixed after starting strong as a result of yesterday's surge in U.S. stocks. The Japanese benchmark index rose 6.4%, continuing the theme of risk appetite, which pushed the yen lower. The Bank of Japan is hinting at an interest rate cut, which should make the yen less attractive. The Kiwi-yen pair continued its rally from yesterday and traded around 57.25 as of 12 p.m. Eastern, which is a climb of 750 pips since its low on Monday. In the UK, mortgage approvals remain near their record low for September, with only 33,000 new approvals, according to figures from the Bank of England. Still, this was the first increase since June of 2007. Lending secured by mortgages climbed £2.2 billion. The revision to August data pointed to a drop of £0.7 billion, which was the first negative reading since records began in 1993. The pound-dollar pair rose more than 500 pips this session, reaching the 1.64 level. This followed another 500 pip rally yesterday. Combined, the 1100 pip climb is the biggest two-day gain against the dollar in almost 16 years and helps the pound reclaim its steep losses seen last Friday. In Germany, the preliminary release of October's CPI showed prices down 0.2% for the month, the third straight month that prices showed deflation. The annual pace retreated to 2.4% from September's 2.9%. The drop in consumer prices will help give the ECB more room to cut rates as it tries to deal with slowing growth in the Eurozone and the fallout from the most recent bout of this credit crisis. In the U.S., durable goods orders surprised forecasts of another decline in September and increased 0.8% on the month as orders for cars and airplanes increased. However, excluding transportation, orders were weak, posting a second straight month of declines. Orders were expected to go down as companies faced tight credit conditions, prospects of a protracted recession, and weakness in the economies of its trading partners, which will hurt demand for exports. And of course, today saw the FOMC conclude its meeting and their decision to lower interest rates another 50 basis points to 1%, which is a 4-year low. The statement left the door open for further cuts as inflation pressures are set to ease. The downside risks to growth as a result of weaker consumer spending, falling exports, and the financial crisis are foremost on policy members' minds. The euro-dollar pair continued gaining today, building on its rally from yesterday's session. It tested resistance near the 1.30 level in the New York morning trading, which was the high from Friday. Conditions in financial markets seem to have stabilized, at least for now, and that has helped the euro to climb about 600 pips since its low near 1.2340 earlier in the week. After the FOMC statement, the dollar gained slightly. U.S. stocks were trading back and forth today prior to and in the wake of the FOMC statement, but just like yesterday, the late afternoon saw a jump into the green for the main U.S. indexes. At 3:20 p.m. Eastern, the Dow Jones Index was up more than 200 points. The dollar-yen pair had reached a high near 99.75 following yesterday's more than 600 pip rally on the back of the surge in U.S. stocks. However, overnight, the dollar fell back down to the 97 level and stayed near that area in relatively calm trading. The U.S. dollar-Canadian dollar fell strongly in favor of the Loonie this session. The pair tested the level near 130 several times yesterday, and as this pair has surged in recent weeks, it looked overbought. The selling pressure that had built up manifested itself as an 830 pip slide starting in yesterday's New York afternoon session. The Loonie was bolstered today by increases in oil, which climbed as much as 9% and closed 7% up on the day. Gold was up as well. Commodities are climbing on further easing of interest rates from the world's major central banks and a return to risk appetite in the world's financial markets. The pair found support at 1.2130, from which it rebounded to the 1.2250 level. Tonight, New Zealand will release data on building approvals and business confidence. Australia posts its leading index, and Japan reveals its manufacturing PMI. Overnight, we get housing data from the UK, unemployment change from Germany, and consumer confidence from the Eurozone. Tomorrow, the US will reveal its weekly jobless claims and its advanced release of third quarter GDP. Canada, meanwhile, unveils its producer price index. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.